Good evening and welcome to Traders Group. This evening we really do need to get our brain around what's happening with the S&P 500 because it's got some very large implications as to what we do next as investors and as traders. So let me just recap on what has been said and what I see today. Time moves on. Things should happen that agree with forecasts, and if they don't happen, the reverse is normally true. I think you've heard me follow that line of logic many, many times. So in the past few weeks, what we've seen is this particular market do what appears to be a double top, which is we know it to be an M top, which is wonderful. What I do know about the markets is patterns don't drive markets. Patterns that are interesting, and when I first started looking at technical aspects of markets, I was of the belief, or people tried to have me of the belief, that they're predictive, and that's just not true. There's only one thing, there's two things that drive the markets. The fundamentals of stocks drives the market, drives the index, and in real time, like in the present, like tonight, it's the volume behavior of buyers and sellers within the market. Therefore, patterns are interesting, but they don't tell the complete picture. And in the context of what we've been looking at, everything we've done in the last few weeks, I believe, is 100% correct. Earlier this week, speaking to Richard, what we were looking at is what should happen next within this market if it was to capitulate to the downside and reach the forecasted levels that we put up last week. And the answer is, as of Monday night, with that bar breaking down, that was the date was the 2nd of the 4th, the market should have continued. It should have continued to fall, because if it was an MA pattern, the market has a 5-day sidewards to upward sequence, allowing the 20-period moving average to catch up, which it did, and then markets generally start to fall over and capitulate, and they go into the fastest rate of change in price. Now, I would make note, apart from that one red bar on the 2nd of the 4th, the market has not continued to capitulate. And in addition to that not capitulating, the market has, for the very first time, closed above a declining 20-period moving average. If the market was continuing to fall, markets don't close above 20-period moving average. They use the 20-period as a level of resistance and fail in a very weak fashion. So first of all, there's a price action alert in the last 2 days that tells me what I would like to happen is not what is potentially forecast in the last 5 days. Therefore, from my long-term experience, the opposite should be true, will be true. And that's usually in 99% of the cases. It's great to do a forecast, but if you are so rigid you cannot switch in that forecast, you're doomed. So the next level of work I would do to try and reach some sort of consensus that market isn't going to capitulate to the downside would be volume. And what I can tell you since last week, in fact, it was starting to show signs of a volume low last week. As of tonight, I believe we will have officially a volume low on this market. What does that mean? It means the level of institutional buying behavior is growing at such a rate. All the institutional people within the markets are buying, not selling. And that would be pretty silly to be a seller when the people that drive the market are doing the reverse. Therefore, I can only conclude that the likelihood of this market putting in a low last night, have a look at the size of the bar, putting in what I would consider the low last night, which is an outside, the previous day's range, is extremely high. So If it's extremely high, we need to pay attention, because if it is the low, you are, as an investor, you should have already built your portfolios, and or when I say already built, maybe tonight or tomorrow, and already be considering if the evidence continues to add up to the upside, meaning she continues to break and close above a declining 20-period moving average, it starts to flatten and point up, that is the low. So you can only go with what is available to you right now. I will be absolutely upfront with you, and I'll tell you, as of this morning, I am fully engaged on the Australian market, fully. And we'll have a look at the Australian market in a moment. Sometimes I like to preempt without getting 100% surety, but I only need probably 1 or 2 nights up in the US, and I would be into that extremely high, certainty category. So this particular market is looking really, really good, and for a potential move to the upside. And Alan from New Zealand, he just typed in his back. Alan, all as I've done, I'll just quickly recap, because I know you had, where are you, in an aircraft hangar or something. Alan, what I said in the last 10 minutes, I was talking really slowly, but I talked about the evidence required to maintain a short view within this market is actually gone. It's not there anymore. And the fact is that last Monday, I'll give you the date. The date was the 2nd. The market looked like it was about to capitulate. Then it should continue to capitulate. It stopped and has reversed and is closed above the 20-period moving average. Price action is not supporting in the last 2 days that view of capitulation, which should be the fastest rate of change to the downside. In addition to that, Alan, I had just talked about a volume low. In the past 3 days, the level of institutional buying behavior has dramatically changed. It is now overwhelming the selling behavior. Therefore, the likelihood of last night being the low bar, when I say the low bar, the bottom defining bar of the next move, the upside, is probably pretty damn high. Interestingly, Alan, before he came into this room, put up some charts in Facebook. Everyone, go and have a look at the charts in Facebook. Independently, he's reached exactly the same conclusion. So that's great. And there's trend lines, and there's a few terms which are different, but totally independently, we're looking at the same thing. And of course, we can see patterns, but patterns do not dictate the future. Once again, what dictates the future is the actions of traders in real time and investors in real time. So therefore, this is an opportunity. This is, maybe you need 1 to 2 days to be convinced that I'm right. That's absolutely fine. But here's something that's really significant. I'm just going to convert to a weekly chart. Let's get rid of all the noise on the chart by converting to a larger time frame. And if we looked at tests and retests going back history, this looks absolutely no different to any other test and retest. And on the weekly chart, it's obviously the low bar. Now, this is the significance of what probably is the low, and that is that it is quite wide-based. Very wide patterns produce very protracted extensions to the upside over long periods of time. That does not totally coincide with my thinking that we already should be in a very strong expansion. November to May is the strong period of equity markets, but here we are in what appears to be a very broad-based accumulation phase. But I'll repeat it again, broad-based accumulation phases produce very large extensions to the upside. I'm going to go back dramatically, back to 2010, but they often produce very long and protracted extensions to the upside. So it doesn't mean that it's going to go straight up. In fact, you might find that But because it's a weekly chart, I'm working on weekly, you might find that on a weekly chart, we do have a very significant rally in the next 2 to 3 weeks. But remember, the pattern isn't complete. It's a weekly chart. So then we may have a really big downdraft and everyone go, oh, we're wrong. It's not happening. This is all the signs of accumulation. It's really difficult to work with accumulation. It's easy to work with trends. Hence, that's what we've been dealing with in the last few weeks. Distribution and accumulation is difficult. Reading it in real time is, I believe, the only way you can nut it out, and that's what we've done in extremely, in an extremely timely fashion. But that's where we are, I believe, where we are as of tonight. That is the potential for the confirmation of accumulation to occur within the next, months. It's still months away. It's huge. So if this is correct, what we should anticipate in the next few 2 weeks at least, let's say maybe even 3 weeks, is a very sharp rally to the upside. This is a golden opportunity for traders. Let's get away from the traders. Let's talk about let's get away from the investors. Let's talk about traders. If you are a trader and you want to trade this move, the best place to be focusing your attention, and you all already know this, is the strongest sectors in the market. We'll have a look at the sectors. I have gone through today the strongest sectors and the stronger industries in two of the two sectors, and I pulled out 5 of my favorite strong stocks out of those 2 sectors. If you want to have them, you're most welcome to them. And I may even buy some of those particular stocks this evening when the US opens at 9:30 my time on the west coast of Australia, tonight. So let's go just have a look at other indices around the world. If we are in accumulation, which I believe we still are, accumulation in other markets may not look as symmetrical as what we're looking at on this particular chart. Before I jump off the S&P 500, I'm just going to move across to XIV. XIV did break above its downward trend, is starting to ebb away. There's nothing additional to what I've just said. There's nothing I can glean from that chart other than what I've already spoke about. I'm just going to jump across to the S&P 500 futures. This is a delayed chart. It is up, not super strong, but it is up overnight, and it's a little bit early to pay any attention to it, but it is up, and we'll see how that unfolds in the next few hours. Coming across to the Dow Jones. Dow Jones, would expect to see it look identical to the S&P 500. Notably, on the right-hand side of this pattern, the market has, on many occasions, closed into the top end of its range, and the range has been tracking sideways, not falling. I just want to come across to some of the other major global indices around the world, notably the DAX and China are my 2 most important ones. And if you ask me to glean anything from a pattern recognition perspective of this particular chart, which is EWG, I can give you nothing. There's just nothing there. If there's nothing there, the only tool I've got, if pattern is useless, is to come back to volume. And the volume pattern on EWG is similar to the volume pattern of the S&P 500. That is, that the institutional buying favor, yes, it's been heavy selling, but the selling's decreased dramatically in the last 3 nights, which usually indicates a low. And that would be true for S&P 500, for EWG, and for other indices that I'm watching around the world. Just coming across to the DAX. This is the DAX, actual DAX within Germany. There's nothing there that I could put my brain around from a pattern recognition perspective that would give me a sense that, I could give you a structure. I don't know. There's nothing there. I suppose maybe I could make it up a little bit. If that's the last low, that would be the midpoint. That would be the retest. Maybe it is the beginning of a pattern. Okay, so looking at Alan has just just going to come back to EWG. Just give me one moment. Alan just pointed out a pattern which could get a brain around. Okay, I agree. Okay, well done. Alan suggested we could describe this as a descending triangle, which, you know, it is absolutely fine. That's absolutely fine. And usually it's setting triangles, break the upside. We shall see what occurs in the not too distant future, and but it's not easy what we've been looking at, because they're patterns within patterns. Especially, you know, W's look like M tops, and the only tool, as I'm now repeating myself, is volume is the only tool I've got to make sense of the evolution of the pattern if it's really, really quite difficult. Let's come across to FXI. Looking at FXI, it's a similar story to the DAX. There is nothing on this particular screen that helps me whatsoever to get my brain around, you know, the evolution of pattern. But once again, I'm going to take Alan's lead and put in a declining triangle. So we can see 1, 2, 3 levels of support, which is supporting the contention that is absolutely right. Usually declining triangles get to or break normally 75% of the way into the apex of the pattern. So that's getting close and should happen within the next few days. Jumping across to the actual Shanghai Composite, is there anything I can glean from the Shanghai Composite? Again, it's kind of early days. If all we've been in for the last 2 months is a huge accumulation phase, in hindsight, you know, when we go to the future and we look backwards, this will be a big W pattern, but it's unconfirmed. You know, there's nothing that I can get my head around just at the moment to say, yes, I am 100% sure, other than volume, where the selling volume has dried up dramatically on all those exchange-traded funds. Let's jump across to EWA, which is the Australian market in the on NYSE. And once again, this is what I drew last week. But again, from a volume, I'm going to start getting rid of this M stuff. Again, from the perspective of volume, on the right-hand side of this particular low, there is a significant shift in the volume behavior, which is and coincides with all other indices that I've been looking at and have access to volume behavior for. Therefore, watch very carefully. This looks like a test and a retest. The retest is happening right in front of us. What would make me completely and utterly wrong? I'm standing here next week and the market's dramatically below the the left-hand side of the pattern, the February touch. That's obvious. It's a break of previous swing low. If we're here next week and that low is respected, the February low is respected, the market's broken and tracking above its declining but maybe flattening 20-period moving average, and we are right. So we are really at the cusp of a switch in the markets, and I believe it is an opportunity. Come across to the Australian market, that is XJO when I say Australian market. And XJO in the past few weeks, I put a projection to the downside with the 100% extension at 56.47. The market in the last week has reached 0.618 of a previous extension. When we look at this particular chart, there doesn't seem to be any definition on the chart that could in any way assist us to make a determination in terms of pattern. That said, to me, I see something. Whether I'm right remains to be seen, but I do see the half of a pattern, and that is there is a shoulder on the far left-hand side, there's a large fall, and if I am correct, and that's the low, I got in. Remember I told you I'm totally committed to the market. This is why I got in. If that is a inverted head and shoulders low, the move is rather dramatic, and I couldn't. I can always put in a stop loss, or I can always hedge my positions. But what I find really, really annoying is to sit here watching the market rally in a very quick fashion. So it's a little bit preemptive because the the market isn't even closing above the 20-period moving average, and maybe you need a few more days to convince yourself that that argument is correct. But that's what that looks like. If it is, remember, it needs to put in a right shoulder as well. We're months away for accumulation to complete itself within the Australian market. Months. Okay, so, and even when it does complete, it's still, when you look at the market, it's not really super convincing. It's still potentially in a downtrend. This right shoulder needs to be, for it to be super bullish, it needs to be angled to the upside, and it's closing above the downward trending line. Alan just put out another theory on XJO. He said it's a good point. It's a good point. Okay, I'm just going to go and pick up Alan's point. Just let me. It's a very good point, Alan. Thank you. Let me clean up this whole thing. The Australian market is the worst index on the planet. If you don't know that, go look at the returns on your super fund right now. If you're in Australia, if you're New Zealand, New Zealand's is land of bounty, and you're probably doing well in your KiwiSaver accounts. But Alan just pointed out this has failed before in terms of inverted head shoulders, because I said, and you are quite right, Alan, the exact same thing over here, where I drew in a shoulder and a capitulation, then expected the market to rally, do a right shoulder, and complete accumulation and break to the upside. So we can't see in the future. We all know that. We can only live in the present. Could this market do another failed inverted head and shoulders pattern? Of course, it can do whatever it wants to do. It's going to do exactly what it's going to do. It can do that. So we just need to be on guard in real time that is a possibility. But you know, in the short term, I strongly hold the view that the market is moving to the upside, mainly based on the volume behavior within the S&P 500. What happens in a month's time when this right-hand shoulder builds or fails, we can't predict or deal with that because it's a future event. But well said, and that is quite correct. And Alan said if it did turn out to be a failed head and shoulders pattern, it would be just a V-shaped bottom, and that would be a true statement as well. Once again, pattern does not predict the future. Pattern is just the revelation or the pictorial drawing out of the actions of institutions and retail investors in real time, but it has no predictive element. As Alan's just pointed out, the failed inverted head and shoulders. It was actually what I was saying at the beginning of my introduction with tonight's discussion. There is no predictive quality to pattern. It's all bull dust. When I say bull dust, it does not predict anything. What predicts the future, if you want to use that word, or preempts would be the better word, is the actions of traders and investors in real time. And the only thing I can get my brain around has been in the last 20 years is volume, because that tells me what people are actually doing, next. Hence my view on the US markets. Okay, so let's work on the basis that we have evolving lows within the market. If we've got evolving lows, not confirmed, evolving lows, we really should be identifying the strongest sectors within financial markets. One of the easiest tools that I use, everyone knows because they've seen me used 100 times, is a relative rotation chart, which I'm just going to pull up and just grab the sectors of the Australian and the US market, starting with the US market. If I was to look for opportunity within the United States market, there's some standout sectors that I would be heading for. And some of them I kind of am not that interested in. things like telecom, I always pass it over due to the volume of opportunity. It's limited. XLU is looking quite interesting, but because the market's been falling, XLU is a defensive sector, which often grows as market falls and it dissipates as market rises. That's not a 100% true statement, but I'm not big on the utilities sector. It's just personal preference. Therefore, what's interesting on this chart? Well, the top sectors within this chart are, just turning my page because I've got a few notes that I took in real time today. The top sectors that I would be looking at to invest in, well, there's the top three. The top three are consumer discretionary, the technology sector. Just give me one moment. They're the top two, and finance. That's the top three sectors. If you wanted to bring your search down to just two, most definitely XLK and XLY. XLK is tech, and XLY is consumer discretionary in the United States. Now, before I came into the room, I went and dug down different levels of the market, looking at not only the strongest sector, but the strongest industries within XLK and XLY. And from those strong industries, I extracted 4 to 5 strong stocks. And that would be an interesting target, both from a trading and or an investing perspective. So what are my top 4 or 5 stocks for those two sectors? Give me one moment. I'm just going to come across to my list. Now, I can almost guarantee you some of these stocks I'm going to buy tonight. I don't think I can afford, even though I've got quite a bit of dough to throw at the markets because it's a super portfolio. I don't think I really want to spend $1,000 on a share. But this is a really hot stock, Amazon, and it's a really good opportunity. There goes potentially the bottom bar last night. So Amazon, I've just picked up 5. Netflix, love Netflix, and I push their share price by watching all their programs on my TV at home and pay whatever they ask for because I love it. Netflix. So, you've got to look at these lows. There is no lows there. There's no pattern. There's nothing there at the moment. So this is very preemptive of what is potentially about to happen. Netflix would be another one. GRUB would be my third choice. SFLY would be my next choice. I'll give you 6. These are the top 6. ETSY, and they're not necessarily big and well-known names. ETSY and IAC would be my last really incredibly high momentum stock, with the view that momentum begets momentum, and we'd expect if the markets have found a low, things like Netflix should do another decent extension to the upside, which is, for those of you who are trading this, a really interesting opportunity. Okay, so let's come across to the second strongest sector of the market. Second strongest sector is XLK, and I'll give you my top 5 or 6. SPLK. Now, what I didn't do with these stocks, I didn't go look at the volume of options traded on these. They could be quite illiquid. All I was looking for, to be honest with you, was strong stocks, because these are, I've got a lot more, but this is the pool from which I'm going to draw from in the very near future to add to my portfolio from an investment perspective. But that does not mean you can't trade the same stocks if the liquidity is there. NOW would be my second stock. I think you can see why I like them. They're really strong stocks, which have all had small counter trends. SSNC, bit of a strange one. PTC. I mean, what tells you it's high momentum? See, the depth of the pullback is residing above the previous swing high. That's what tells you. You don't need any tool to measure this. That's what tells you this is an extremely strong stock. Pullbacks are above previous swing highs. Very, very strong. Okay, so just give me one moment. Just give me one moment. Okay, I've got an alarm going off in my earphones. Excuse me one sec. I know why. I've got my trading platform open. It's just shutting down something. Sorry, guys. Okay, that's gone. Okay, so and the last two within the tech space is ADBE, Adobe. Everyone uses it, and FTNT again. Beautiful little camera trend, looking like it wants to break. Now that's my top group for the two strongest sectors in US markets. Just going back to my pad. I could give you lots more. I mean, I was going to do a list for finance. I might just type them in while I've got them here. They were, but it's probably too much information. BAC, MS, PNC, BLK, SCHW, and the last one is CME. Now those stocks are not necessarily the strongest sector, but they're stocks that I am considering to add to my portfolio this evening. So that's where those come from. For trading, concentrate on the strongest sectors. Remember, the stocks are the strongest stocks from the strongest industries, from the strongest sectors. That was those first two groups. Okay, in support of a continuing upward moving market, I look at the internals. In terms of advancing and declining stocks, just 2 weeks ago, well, just last week, we had 200 advancing stocks in the S&P 500 and 291 declining. The reading that I took before I come into the room was 226 advancing, 264 declining. Not a super convincing shift of numbers, but if that is a low, that's it's just the beginning of a low. Well, you can't expect anything more. The figures that I would like to see switches, not the number within the S&P 500 of shares or companies. It's actually the volume of those companies, and the volumes are not super convincing when I look at advancing and declining stocks. In fact, the declining volumes is still greater than the advancing volumes. I will watch that very carefully in the next week. It should reverse completely if we're correct. In terms of new highs, new lows, last week, 2 weeks ago, or just last week, I'll stick with last week, there was 5 new highs, 14 new lows. This week, there's 3 new highs and 18 new lows. Again, not that convincing, but remember, if we've only just got the bottom bar last night, not surprising, we need more time to pass. Those numbers will shift to support the view that the market's continuing to the upside. Let me shift across to the Australian market. In the context of the Australian market, if you were digging around for investment opportunity, there are some very specific sectors which I would concentrate on. The best and most interesting sectors are things like, well, the top 4 sectors would be healthcare. It's the big blue bar, big blue line on screen. Now, healthcare in Australia is not that complicated because if you go into healthcare, there are a lot of there are not that many stocks to choose from. It's not like the United States where there's just hundreds of stocks within different industries. So you come up very quickly. I'll tell you exactly. This is what I bought this morning. I'll show you. And it took me all of about, I don't know, 4 to 5 minutes to do this. And I had to go out of my office today. But this is what I purchased. I purchased COH on the open this morning. I purchased CSL on the open this morning. I purchased PRY on the open this morning. I purchased ANN on the open this morning. And I purchased RMD. And it didn't take me long to pick that group up. That is what I believe are the strongest stocks within the strongest industries within the Australian healthcare sector. And there's more, but when I go for a sector, I only buy 4 to 5 stocks max. Okay, just coming back to the sector rotation chart. Just give me one moment. Okay, coming back. So healthcare is a bit of a no-brainer. It's really, really strong. What's kind of new on the screen is consumer staples. Consumer staples has been in a really, basically been in the doldrums. If I just get rid of all the information on screen and just bring up the particular, just the one sector, and give it a much longer tail, it hasn't been going anywhere for many, many months, but it's now picking up. There are some very good stocks within XSJ. They are mostly, I believe, New Zealand stocks. You know, the A2Ms and the Bellamy's, you know, these are all milk-based, exporting to China type stocks. They're not new. I mean, we've had, these are long-term, you know, shares that have just been cranking up and up and up for days, weeks, months, and years. And if we to just have a very quick look at some of those shares that I am interested in the Australian market for that particular sector, very, very quickly, I'll just put up the BALs, and you clearly see when the charts come up, these are super strong stocks. You know, they are looking good. The WBA's just a little bit different. TWE, which is Treasury Wines, and the last one was BCGC, which is looking good. Okay, coming back to the sector rotation chart, just to finish off the story for Australia. So what are the key sectors within Australia? It is healthcare, consumer staples, tech, information tech. Very, very interesting. It's hard to see on this chart. Just give me one moment. It's over here. It's difficult to see. But tech is the third strongest sector, information technology, within the Australian market. I know it's not a huge sector. Still got some very good looking stocks. Industrials. Industrials has been a very poor cousin over the past 6 months. It is a new opportunity, and that's how I would describe it. It has not been a sector that I have had any focus in on for a very long time. But this morning I chose a few industrial related stocks, which were SEK. That's an employment company. The chart, you know, is looking good. SVW, looking good. GWA, looking good. SSM, looking good. And RWC, really strong trends. Of course, I would have hoped that if I go through, I want to see some sort of supporting upward volume picture for all of these stocks. And I believe that is a true statement, maybe not in the last 2 weeks because the market's been pulling back, but the volume picture for these stocks is supporting the view that these markets will continue to the upside. Coming back to the sector rotation chart, the last sector is finance. Please be careful of finance. Finance is a PIG. The banks are not the best place to be in. We all know that the banks are having a Royal Commission. We all know that the real estate boom on the east coast of Australia has topped, maybe in most states. I still believe, I understand that Victoria is still rocketing. I have restricted my attention within the financial sector away from the big banks or even regionals to REITs, real estate investment trusts, and diversified financials. So you've got to be very, very selective. I could not get excited about the banks performing dramatically in the next year until this Royal Commission gets out of the way. Therefore, for the very first time in a long time, I've got a very low interest and a very low weighting in the banks. Okay, I think we have, in fact, I'll show you what I picked this morning. I didn't pick one for the first time in history. I didn't pick not one major bank. I picked MQG, LLC, CMW, and FXL, Flexi Group. So we'll see how they perform in the not too distant future. Okay, I think I've done enough on the rotation side. We have now identified the strongest sectors within the Australian market, the stronger sectors within the US market. You could do, based on what I've said, if you've been writing them down, or go back and listen to this tape, a lot of work looking for opportunity within those sectors. And because I've only mentioned 3 or 4 sectors, it's cutting out a dramatic amount of work. For instance, in the US, I've just only mentioned the top 3 would be the ones I would really focus in on. And you know what they are: discretionary, tech, and finance. Okay, let's get off the general equities market, come across to other points of interest, meaning currencies and oil and gold. First of all, let me do currency markets. The only one that I really have any interest in focusing on is the Australian dollar versus US. And when I have a look at the Australian dollar chart, I open it up in its daily chart. It's obvious where this chart is going, and it's generally been doing what it's been doing for the last days, weeks, and months. When I look at the volume for FXA, there's nothing supporting even a low coming in at the moment from a volume perspective, and there's nothing supporting a low coming in at the present time from a technical pattern recognition perspective, and we can see it's approaching a trend line. As we do each week, we bring this out with a much larger time frame to get a good perspective of the FXA, and we can see it has been moving up in a channel. It is approaching an upward sloping trend line. Therefore, possibly in the next 2 to 3 weeks, we may see technical, patterns evolve that tell us, supported by volume, that that's the low for the next move up in this channel. That's it. So it's in an uptrend. Unless it breaks that channel, it's in an uptrend in the big time frame with a pullback occurring in the lower time frame. Coming across to US dollar. This is US dollar against Australia, traded on the Australian market. It's obviously the reverse. This is in a strong downtrend, and in the short term, it's obviously going up. And volume continues to support the US dollar. Looking at the US dollar index, which is the only instrument I've got volume information for, it is still well supported to the upside, but it is in an overall downtrend when we look at it on a weekly chart. Just coming back to the daily chart, there is no indication this upward move is threatened in any way, hasn't broke trend, volume supports it going up, and it probably will, and we'll look at that in the next 2 weeks as it reaches the top of this line. I've moved a bit quick and I didn't answer a question from Alan. Alan said, did I use Bollinger Bands to select stocks? The answer is, Alan, I didn't have time. I did not do that, okay? Okay, so coming back to gold, if the US dollar is going up, usually the gold is generally, not always, generally inversely correlated to the currency markets. And when I look at the gold market, it's really quite difficult to get a bead on what's happening. I need to come out to the larger time frame, and it becomes really clear what gold's doing in this rather large time frame, and that is obviously it's going up, and we've said this a squillion times, it's a low momentum upward moving area of the market, which is looking not fantastic. I don't have anything to do with gold because it's too low momentum. Coming back to the daily chart, you would expect it to be going down inversely to the US dollar, but that's not what's going. It looks like it's even got a level of support. And when I come to the volume pitch on this chart, that low that looks like it's happening, I've got to clean up this chart, actually is supported by increased buying volumes by institutions. Therefore, we could be seeing a market which has already come back to the trend line and is now starting to form up a trend which has barely begun because it's only just broken the downtrend. So that looks like the potential for upward move potential in the next few weeks. Just give me one moment. I'm just looking at my sheets. There is another really interesting, very strong element to this market, and that is not energies, but oil. And I believe I mentioned it last week. It's sort of disconnected from the energy market. The best way I can illustrate that is to first of all bring up the energy chart. The energy sector is horrible, and when we were talking about this last week, we drew this crazy looking picture on screen. It looks like a head and shoulders pattern, but the market hasn't broken below the neckline, so it just is what it is. It doesn't really factor into anything that I'm doing. I've got no energies at the moment. That said, when we come down to an industry of energies, that is the commodity called oil, and we look at USO, it's a completely different picture. And it doesn't matter how I look at this, oil has started to build a strong uptrend. And in the last week, it came back to its trend line. And when I look at the volume picture behind oil, it's dramatically strong, meaning there's an enormous amount of buying kicked in as this market fell down to that trend line. Therefore, this trend line should be maintained. That is a potential opportunity if you wanted to trade oil, USO. And I'm not talking about, don't go for energy companies. I'm talking about the commodity oil. You can trade it through the code USO. So if I looked at USO on a sector rotation chart, which I don't do very often, it does reside on the far right of chart, which tells me, in compared to the S&P 500, it is one of the strongest elements on this. I know it's not a sector, but it is one of the strongest elements on this chart. Therefore, quantitatively, through comparative relative performance, technically through price, and volume analysis, there are three elements that support a continuing upward move in the Texas light crude market into the future. Okay, I think I've covered everything I need to cover. A little bit of this evening was preemptive of a market continuing to the upside, but if you go now, after you finish here, and come across to the Traders Group Facebook site, you can read Alan's analysis. And I didn't really, to be honest, Alan, I didn't reconstruct it, and I didn't, I really just looked at your pictures, and I noticed this tweezer bottom picture, which I've got no idea what a tweezer bottom is. New term for me even, but it seems to agree exactly with what I just said, so a little bit interesting. Okay, guys, that's it for this evening. Thank you very much, and I look forward to seeing you all same time next week. Thank you. Good night.